how to buy a beachfront house or condo with mining stocks. Is that for real? Am I really going to have the audacity to say that? Yes, I am. Here we go. We're going to have some fun, all right? So this is how buying a beachfront condo with gold. We're going to start with gold, okay? Now, the Fed actually tracks the price of certain regions of house prices, and they actually track the price of beachfront condos in Boca Raton, Florida. They actually track this. They've been doing it for a while, you can see. So this is the ratio of what it costs to buy a beachfront condo and its ratio to gold. Now, this isn't the number of ounces of gold, of course. This is just the ratio. It's hard to put the number of ounces the way the Fed does their data. But you can see, look how low it was way back in the 70s. Look, you can see how high it was. And on the far right, that's where we are today. That's where the ratio is. So you can see that the ratio would have to fall by 3 or 4 times to match some of the prior lows, which means that a beachfront condo, if you're buying it with gold, would actually get cheaper, more affordable, okay? So I think that ratio is going to come down. You can form your own opinion. I think the gold price is going to go up. I think real estate's, it's been high and it's been going higher. Maybe it stays high, but if the gold price goes up, you can actually afford it more if you use the proceeds from your gold sales. All right, so what else we got here? All right, how about going to a resort, taking your sweetie to a fancy resort for a week or 2 or a month or whatever? The Fed tracks this data as well. So this is, again, the gold price and its ratio to resorts. And this is the average price of a resort. So this is not Motel 6. This is actually a resort like where we are today. And you can see how high it was, how low it got, and where we are today. So not too bad, right? So even though resort prices have gone up, with the rise in the gold price, if you're using gold, it actually is still affordable. What else we got? How about airfare? You got to get to that resort somehow, right? So this is the data from the Fed and the ratio of gold to what it costs to actually buy the average priced plane ticket in the U.S. This is U.S. data, and its ratio to gold. And you can see it's actually not that bad, right? So airfare prices, have they gone up in the last few years? Not priced in gold. Okay. And who likes wine? I'm from California, so it's kind of required to drink wine, but the average price of a bottle of wine in the U.S. and the ratio of it to gold. And you can see that even though wine prices have gone up, they've not gone up priced in gold. So are you going to use fiat currency to buy these things, or are you going to use gold proceeds? What else we got? Who wants a brand new powerboat? How about that? So this is the powerboat. This is powerboat, not sailboats. Again, priced in gold. You can see how high it was, 20 years ago? And where it is at now. So powerboat prices have gone up with inflation, like many things, right? But not priced in gold. If you're using the proceeds of gold, they've not gone up. Okay, and ladies and gentlemen, here it is. Buying a beachfront condo in Boca Raton, Florida with mining stocks. This is using the Barron's Mining Stock Index and that same number I showed you earlier for what it costs for a beachfront condo. So you can see how volatile this ratio has been. So how high it was, how low it's been. That's because gold stocks obviously are more volatile than gold itself. But you can look and see how low this was. You can look and see on the far right where we're at today, the ratio. So that ratio could fall 3, 4, 5 times if mining stocks outperform what a beachfront condo in Boca Raton goes for, okay? So that's what I think is going to happen because we've started a new bull market. I think we're near the bottom or at the bottom for the junior market. So I think a Boca Raton beachfront condo is going to get more affordable if you use your proceeds from gold stocks. All right, so the timer didn't start, so I have no idea where I'm at. So there you go. I want to go over this chart because it shows you all of the run-ups in the gold price, the uptrends, the up cycles. And you can see there's great variance. Some have been big, some have been small. But if you look there on the far right, that is the average of that's where we are today. So gold's been going up for about 2.5 months. And so if this were the end of it, it would be the shortest and lowest in history, in modern history. So the natural question that comes up when I show that chart is, okay, how long did those gold up cycles last? Well, here you go. Here's how long they lasted. You can see, again, there's great variance. Some are short, some are long. The second from the top is our current one. So it's about 2.5 months now from when I did this chart. And then the top bar is the average duration of a gold upcycle. And you can see it's about 2.5 years. So at 2.5 months, this probably is not over, right? And here's more evidence of that. The current bull market is just getting started. This is measuring actual bull markets, not just upcycles. And you can see where we are today. This chart's about a month old, but you can see where we are. This is just getting started. If it were to stop now, it would be the shortest and poorest performing gold bull market in modern history. Okay, a few more quick things. One is I believe there's going to be a lot more M&A coming. Pardon me. And the reason for that is I think it was Hugh at Revival that showed this chart earlier, the number of exploration projects that have been successful and the number of discoveries we've made, how many ounces are coming on, that's the gold line, versus the black bar, that is gold production. So you can see the number of discoveries in the gold bars, excuse me, not the line, are really lacking to keep up with production. So it is actually cheaper right now for producers to buy ounces than it is to go out and explore and develop and permit. It's cheaper for them to buy. And so therefore, when all of these people up here make a big discovery, right? When they all make a big discovery, it's more likely that they're going to be bought out than somebody coming along and trying to just develop on their own. So keep that in mind. In fact, that could be one catalyst for our sector, right? Is a big acquisition, a big M&A announcement that catches the attention of not just our industry, but even generalist investors, and them going, wow, look at that. That could be a catalyst for our sector. Okay, so I'm going to have to go through these real quick, but some of you are probably still thinking, Jeff, I don't know about this, buying a beachfront condo with mining stocks. I'm going to give you hundreds of examples real fast. These are all in Paydirt, by the way, of stocks that have hit Paydirt and brought investors big returns. This is the 1979, 1980 mania. This period only lasted about 13 months, give or take. And you can see the return of some of the stocks during that period. During 13 months, this is what they did. The average of all those is at the bottom. I'll put the average of all of them at the bottom. Who remembers what happened to the gold price in 1981, 1982, 1983? It bombed. It was completely flat. We had the big mania, and it gave most of it back. So how could there be gold stocks or mining stocks that did well during that period? Well, it was because of discovery. So around the Hemlo area, there was a big discovery. Again, I think that's something that could be a catalyst for our sector, a big discovery that makes headline news. That could bring investors into the junior sector. Anyway, you can see what they did there. And here you go. This is the mid-1990s. What were the mid-1990s called? The nuclear 90s by miners, because gold and silver were dead. They couldn't make any money. Their earnings were really bad. So you can see there what they did in the mid-1990s with a flat gold price, and the average there at the bottom. I show this chart because here's the 2001 to 2008 bull market, right? We had the big run up to 2008, the big crash, and then the big run up again to 2011. So I have the producers there at the top. the juniors at the bottom, with the averages in there as well. So you can see that if you got shaken out, you might have missed the big upside there. So 2016, how many of you remember that? All of a sudden, gold and silver spiked just out of nowhere almost. And there were a lot of stocks that did very well. You can see the top there. I think that's producers and juniors, I think I have there. So you can see just how well they did during this period. And I have the averages there. The catch is you had to be invested before it happened. Kind of like right now, right? I have many more examples of this in the book Paydirt. Just look through some of these. Look at green highlights. There's the people some of the people that are in the book. I had 17 people in the book, in addition to what I wanted to say. And I asked every single one of them, hey, give me a couple examples of when you personally hit Paydirt with a mining stock. And there you go. Look at some of those returns. Quite incredible. Another thing I want to get across is that there always are going to be corrections in our sector, okay? This is the 2001 to 2011 bull market. This is a bull market. And yet look at all the corrections that were there. There were, 20 corrections during a bull market. The average of those corrections is the bar on the far right. So the correction we've currently had, if you agree with me this is a new bull market, the current correction is about 4%. So if gold falls back down to 2,100, it would be historically very normal, okay? I'm not saying that's what's going to happen. What I'm saying is you want to be prepared for corrections in our sector because they're going to happen even in a bull market. They even happened in a mania. This is the 1979-1980 mania. It lasted, for gold, it only lasted about 13 months. For gold stocks, it lasted almost 2 years. But these are the corrections that we had during a mania in gold and miners. Again, the average is on the far right there. You can see just how much they corrected. So corrections are normal. We have to be used to that. So what does that tell us as investors? In my opinion, it tells us you do need to take profits. If you get a big run up, doesn't mean you need to sell the whole position if you really like it. Take some profits, and then whenever we do get the next correction, because there will always be corrections, that's when you can buy something that you may have missed the first time around. So I'm really proud of the website that we put together. We have a ton of resources now on the site, but I want to tell you a quick story first about number one there. So 2008 came, and we all remember how bad that was, right? It was a scary time. And gold crashed, all the miners crashed. At Casey Research, the policy was, if people want to truly speculate, now's not a bad time. This is October, November of 2008, very bottom. In fact, gold bottom, did you know, on Halloween day of October 2008, so trick or treat. Anyway, we advised that, and there were some investors that did do that, some subscribers that did that. I didn't. It was just too scary. It was just too scary. I couldn't do it. So I didn't pull the trigger. And what happened? Well, I showed it earlier, but many of those stocks soared, and we got a lot of thank you letters, as Gwen probably did as well, of all these subscribers that made a serious boatload of money because they bought at a big depression. So when COVID rolled around, what did I do? In March of 2020, it was getting very ugly, very scary. Everything's crashing, right? I started buying. And I bought silver. I think the low I got was $13.05 spot price was the low I got. I bought silver twice. I bought some gold. But what I really did was load it up on miners. I mean, I seriously loaded up. And by September of that year, my entire mining portfolio, not one or two stocks, my entire portfolio had gone 5x. I ended the year at 4x. So you might say, I love big dips and I cannot lie, because it worked very well, okay? So I think we have a similar situation right now. Junior miners have been completely beaten up and destroyed, right? So I am buying fairly aggressively. So, and that's the advice that we're giving. So we have the free site there. That's the goldadvisor.com. We cover 21 companies actually now for free. You just have to register. You can get our analysis for free. We track every news release that they produce. We have the paid newsletter, Paydirt Prospector. Just started that. That's been a lot of fun. I wake up every morning and I love what I do. I wake up and I'm like, all right, who's got some news today that I can really talk about? So that's more of an alert type service, though. It's not a daily type of thing. It's whenever there's news. And then the book Paydirt there on the right. I have a couple copies left, I think, if you want to buy one. So lastly, how many of you are going to miss Gwen Preston? It's a yay. So Gwen, we're all going to miss you. We're sad to see you go. But thank you for selling me your business. I really appreciate that. But seriously, I'm going to do my very best for those of you who are subscribers to Maven Resource. When you come over, you'll be Paydirt Prospector subscribers. I think Gwen and I are the ones most aligned, and so we're very excited about that. Peter Krauth is coming over as well. So those of you who subscribe to his silver newsletter, that's coming over as well. So I'll do my best to mimic what Gwen does. The only thing I will not do is I will not put a dress on. So you cannot expect me to do that. So.